Welcome, everyone. My name is Sean Gillispie. I'm a product coach at Vecteris, and I look forward to speaking with you today about the latest trends when it comes to productizing B2B professional services. For those of you who are not already familiar with Vecteris, we support B2B services organizations to build innovation capabilities through what we call the productization pathway. Our founder, Aisha Tierney Armstrong, along with two other members of our team, Jamie Drennan and Molly Tips, have published 2 books around these topics. The first is Productize, the ultimate guide to turning professional services into scalable products. And the second is Fearless, which guides leaders on how to craft a product-friendly culture. Be on the lookout also for our 3rd book that's coming out this spring, which will focus on go-to-market activities. And Vecteris really provides an advisory solution to support organizations as they embark on their productization journey. So today, I'm going to share with you the key findings from the Vecteris 2024 Productization Benchmarking Survey. We will have a more detailed report that we plan to release in the next couple of weeks, first to the survey respondents and then later to everyone who's interested. The findings here are based on results from a survey we conducted during the final quarter of calendar year 2023, in which we received 47 responses from members of B2B professional services organizations, predominantly C-suite executives and product leaders, and they really ranged across industry, organizational size, and productization lifecycle phase. So let's jump in. I'm going to share with you a summary of the most interesting findings from the results around 4 key topic areas. 1, I will cover the drivers of productization, both external market drivers and internal goals. 2, we will discuss the challenges organizations face when productizing. Next, at 3, I'll share some of the tactics and strategies we see organizations taking to succeed. And finally, at 4, I'll share some trends on how organizations are investing their resources to support their productization efforts. And with that, let's jump in. When we asked respondents what market trends are driving their productization efforts, what we found is that productization is motivated equally by AI and other technologies, along with changing customer expectations, both at 51%. We found this data to really affirm something that we've been hearing in multiple panels that we've recently run with B2B professional services organizations who are looking to productize. Notably, those executives are all approaching Gen AI in particular with an eye on how it can support a better customer experience by supporting the humans in their organizations to do things they never could before. So this is why we think that the technology really balanced with the human focus is the way forward, and that's what we're seeing in the data. So let's take a look now at some of the internal goals that organizations aim to achieve with their productization. When we asked about the primary goals for productization internally, what we see is that those drivers focus on key financial goals. Notably, a desire for organizations to increase recurring revenue, which is at 57% of respondents, and a desire for improved gross margins at 53%. What this tells us is that what organizations care most about at the end of the day is that productization will improve the financial performance of their organization. So, given those 2 drivers, both internal and external, let's see how respondents think about the task at hand. Well, they apparently think that productization is pretty hard. When we asked what aspects of productization journey are difficult, a majority of respondents rated 11 out of the 15 challenges that we had listed for them as difficult or very difficult. And what this tells us is that there are very few things about this transformation that people are finding easy. Let's take a little bit of a closer look at what they find most challenging. If you can't read all the items on the chart, I've highlighted here the top 3 things that were most often cited as difficult or very difficult. Those are, number 1, moving faster with development and launch at 79%. 2, setting the right sales strategy, structure, and incentives at 74%. And 3, reducing the amount of customization we do for customers. There's really so much to unpack for each of these 3, and I'm going to talk a little bit more about that speed in a minute here. But certainly at Vecteris, we've noticed how challenging it is for many organizations to get the sales aspect of productization right and the go-to-market strategy right. And that's really why we've embarked on writing our third book that's dedicated to that topic. So it was affirming for us to really see that at least our efforts to do more help here are warranted. And with customization for clients, it's so hard to overcome because it's at the very fabric of how professional services firms have typically succeeded. We see every day the mindset and culture shifts that are really necessary to deliver a scalable solution. So really understand why that is noted as challenging for organizations. Okay, so with all these challenges, how, you might ask, are organizations doing on their journey? Well, as it turns out, even though it's hard, organizations usually meet their productization goals. And this should be overall good news and give you hope that you can be successful here as well. In fact, of the 7 different types of goals organizations set for themselves, 6 of those goals were achieved by a majority of the respondents' organizations. And interestingly, when you look at the percentage attainment of each goal, increased valuations gets the top marks at 75% achievement. I find this particularly interesting because even though the most popular internal drivers are recurring revenue and gross margins, as we saw a few slides ago, very often a new productized service or product within a B2B professional services firm does not necessarily stand on its own. So it might take a while to scale its own revenue and see the margin gains. But when you're thinking and asking holistically at the impact it has on the enterprise, those productization efforts are often complementary to some of the core products in a number of ways. They can speed up the sales process or improve stickiness of the broader product offering or make it for better retention. And any number of those improvements will really contribute to better company valuations. And of course, remember, a single recurring revenue dollar can be valued at 4 to 10 times a one-time revenue dollar when it comes to valuation multiples. So clearly there is benefit to be able to be thinking holistically and giving yourself the flexibility for how you get there and impact that valuation metric. So now that we see organizations are in fact meeting most of their goals, let's take a closer look and see if we can tell what exactly they're doing to be successful. I think it's certainly fitting that if the top challenge organizations face is to move faster with development and launch, then the place to see how to be successful is to look at how long it takes to go from ideation to generating revenue. Of our respondents, 30% don't have a product in market yet. So many are still in the early stages of productization. But for those who have launched, the majority took around 1 to 3 years to see revenue from their new product, or 38% overall. But let's take a look a little deeper and break this down by organizational maturity. When we now see the time it takes to launch by productization maturity, it's that growth stage organizations who are able to bring to market products faster. And the more mature and established companies end up taking the longest, with some even taking 3 to 5 years. Okay, so this is interesting, really interesting. But what about the most successful organizations? And here's where it gets really interesting. For organizations who indicate they've exceeded their productization goals by over 25%, they're twice as likely to go to market in less than 1 year, and none of them took more than 3 years. This means that there's a really strong indication that when organizations are able to overcome that challenge of speed of development that they noted earlier and get something out there quickly, then they see the outsized results. And I tell you, I was really curious about what in the data I could find about those organizations who had indicated they exceeded their goals. I sliced it every which way from Sunday, but I couldn't really find very many strong trends or anything that stood out until I came to this question about speed to market. So of all the things, this seems to be the one primary factor that the data is showing us is unique about these firms who outperform. Okay, you say, we get it, Sean. Going faster is the hardest thing, and if you can overcome that hardest thing, you're most likely to be successful. We got it? Okay, but how do we go faster? Well, I think there's some really good clues in the next set of results. When we asked organizations what strategies they're currently taking to bring products to market, they told us something interesting. First off, in their current strategy, they're focused on standardizing and tech-enabling delivery of services, with a whopping 77% reporting that this is their current strategy. So you think about it in relation to our conversation about speed and some of the other challenges, this really makes so much sense, and it's totally the right thing to do. Starting out with standardizing what you already have for your existing customer base is almost always going to be the fastest path to market. You know the customers, you're not inventing something completely new. There are often really pre-existing tools and software solutions out there that can help you get there really fast. And of course, more coming on market every day. But you get to quickly scratch that itch for more recurring revenue and less customization. Okay, great. So that makes sense. So then, is that where organizations leave things? Well, no, it is not. When we ask about the strategy organizations are taking in the future, the answers shift, and pretty dramatically. First off, we see the strategy of standardizing and tech-enabling delivery of services drop from 77% as a current strategy all the way to just 40% as a future strategy. Yeah, so as it turns out, that's not what most organizations want for themselves long term. What they really want is something more ambitious. We see bring products to market to complement services rise from just 38% as a current strategy to be the top future strategy at 68%. But there's some other big shifts for the other two strategies to bring products to market as well, with fully productizing raising by 21 points. So the big shift shows that organizations are really then optimizing for speed and quicker wins in the near term, and then setting themselves up for bigger, more scalable, ambitious ambitions in the future. But really what they're doing is they're setting the right strategy at the right moment. And the next set of data really reinforces that this data, while shedding some light on some additional things and exactly what how this shows up in the roles that they're investing in and the investments that they're making. So most of these organizations, of course, are professional services organizations that are accustomed to selling services. So as they transition to selling productized services and products, what we can see is that for many of them, their doer sellers, or often partners and customer success roles, are going to play a critical role in getting productization off the ground. Startup organizations are completely reliant on doer sellers, and even growth stage companies have a nearly equal role for doer sellers as dedicated sales. Of course, just like with shifting strategies, once you get to more mature organization, that's where you see dedicated sales roles and account management roles taking the largest portions of the sales responsibilities. So we see services professionals really taking on sales roles to start. What about product managers and product development? Let's see what the investment trends look like there. When we asked organizations what their total productization budget is for the current fiscal year and how many FTEs they have dedicated, we see some common patterns. First off, as organizations scale in revenue, they're clearly able to invest more in productization. As a percentage of revenue, though, productization's efforts end up dropping down to just sort of more of a drop in the bucket for some of the larger organizations. But even still, you can drive a ton of innovation even within a larger organization with just 10 to 20 people. In my experience, that's a pretty big product team and can manage bringing a pretty big portfolio of products to market. So what's even more interesting is when you look at the FTEs dedicated to product management or innovation, what was surprising to me is just how many organizations have no dedicated FTEs yet. So fully 75% of organizations in that startup phase reported no dedicated FTEs. And it gets a bit better at growth stage at 50%, but that's still surprising to me. And even in mature organizations, 18% have not yet dedicated an FTE to drive these efforts. This supports the notion that many are getting started with the services professionals taking on these roles. But I see this as a big risk to overcoming the challenge of speed to market, which they've already shown is a huge differentiating factor in achieving your productization goals. So now you can see that if we cut this by organizations who exceed their goals, then only 13% lacked a product management FTE. And so those dedicated product management resources can really play a huge role in driving the initiative forward through focus, by doing the right kind of research and go-to-market enablement that will make sure that when you do launch quickly, it won't fall flat. So now, given a lot of organizations don't have any dedicated product management FTEs, let's take a look at if we think that trend will continue, or if they'll be closing some of those gaps, as I would hope. In fact, organizations overwhelmingly do plan to continue to invest in their innovation efforts. We see that 82% aim to maintain or increase their new product development budget, which is actually 2 points higher than when we did this survey last year. It was a bit surprising to me how many startups don't anticipate a change versus intending to scale up budgets. But at growth and mature companies, that's really where we see a clear majority of companies not just maintaining their budgets, but increasing them. Now, I will say, when I look closer at the data, of the 18% who ended up cutting their budgets, the average cut was about 40%, or what would be nearly half the budget. For some, it was 80 or 90%. So what that tells me is that there are a few organizations out there that have either hit tough times or are putting productization thing on pause, this thing on pause, which means, to me, if organizations are not seeing results, they will make significant cuts. So it's important to focus on delivering those results and, again, delivering them quickly. But let's not end on a negative. For those organizations who are increasing, the average increase is 29%, with a few topping out at a huge 100% increase. So there are clearly many organizations, and most of them, in fact, who are maintaining their budgets and investing further. So with that, let's recap some of these key takeaways, and then I will open it up for questions. So what I hope you will take away are the following 4 principles to remain focused on in your productization journey, all in service of exceeding your 2024 goals. Number 1, embrace the technology to better serve customers with that balanced approach. Number 2, speed to market makes the difference. So go as fast as you can, but of course, take just enough time to get it right. Number 3, pick the right strategy for the right moment you're in. Oftentimes that means starting with productizing existing services and then bringing new products to market that can complement the existing services and even standalone products. And then 4, focus your goals around what impact you're having at a total enterprise level. There are many ways productization efforts can benefit your business, and although it's not easy, many others have proven that it can be really successful. Well, I hope you all found this interesting, and now we have plenty of time to open it up to questions. So please put your questions in the chat, and Molly may send some over to me as well. All right, I see one question really about how to speed up. So this is a great question, and I think we covered it a little bit, but what we find is that when there are people, product management professionals dedicated, that really helps because they can do a few key things to help the organization go faster. One, they can help get the voice of the customer really quickly, so you're setting going in the right directions. And 2, they can really help focus down on what is that minimum viable product that we can get out into the market really quickly to be able to test the early demand. So those are the things that I see the most successful organizations really being able to do well to go to market faster And thinking about that minimum viable product really carefully is you don't have to build something yourself. A lot of organizations worry that they need to build it themselves, but there's a lot of no-code, low-code tools out there and organizations that can help getting that initial product out to market. And usually it's a smaller thing than you thought of up front. So great question. Thanks to Judy for asking about how to speed up. And we have another question about how do you lower the bar to quickly iterate? I think these are really related questions. When you're thinking about iterating, yes, you want to go fast, you want to get that MVP out to market, and you want to think about what are the key hypotheses and assumptions that are going to be critical to the success of your productization efforts. You'll typically have those hypotheses that you want to test. And so with every iteration, think about the one small learning goal or one small outcome that you want to see if that latest thing that you're putting out there and iterating is actually making a difference. So think about the really breaking it down to the smallest thing that you can that will impact the customer. Okay, another great question. Thinking about the percentage of an FTE's time, what percentage should be dedicated to the productization strategy, especially when balancing day-to-day? This is a great question because I think what we noted is that there are a lot of organizations that kick productization off with doer sellers. I think it depends a lot on your company and how fast you want to go. Of course, the faster you want to go, the more you want somebody who can be dedicated or nearly fully dedicated. What we like to say is, at a bare minimum, I like to see people be able to carve out 20%, and I've worked with some organizations that can make that work. But even better if you can do 50% and really block someone's time off. Because as we know, the client work, when it comes in, it always takes priority, and it's really hard to protect that time to work on your broader productization efforts. So bare minimum 20, but that's probably going to get stolen. I'd shoot for more something like 50 if you're going to have somebody be part-time. All right, some fantastic questions so far. I'm not seeing any more come in. Give it another second, but just want to note that these findings that I shared with you today are some of our summary findings. We are putting together a full white paper with some of these findings and some additional details where we break out by organizational maturity and revenue size in a couple different areas. So that will be coming out shortly. Look out for that, and please reach out to us if you have any further questions, if you want to dive in deeper about how to go quickly and some strategies there, or just have curious questions about some of the data that we shared here today. So I really appreciate everyone's time and great questions. And I'll stay on just for a few more minutes if people have any more questions coming in. Okay, so we see one more question coming in. Who should drive product development to achieve speed? Should that be product, tech, sales? This is a really interesting question. So generally what we find is that product management is the best to drive that speed, because product is going to look at the market trends. Tech can go really fast, and it's really important to have tech partners, but not every organization we're working with even has internal tech teams. And so you don't necessarily need a technology team to build it yourself. And there are currently certainly can be a valuable partner if you have them, but there's lots of options to get things that are almost prototypes out there, but there's all other options to bring in tools or off-the-shelf software that can really enable existing services products, bring something to the next level to get it out there quickly. And so what product managers are going to be able to do is they're going to be really focused on what's the market demand, what's that customer problem that we have to really solve early for the early adopters to want to use this and move forward. Now, sales plays another really important role in that they're really out there talking to customers every day, and that, at the end of the day, they have to sell it and be ready to sell it. But generally, the product team is able to go the fastest and be able to work with sales, work with technology as needed, and get early versions of things out there. We have another good question coming in. What's your take on product support? Do we need to set up a dedicated organization for support, and at what cost allocation? So I think what you mean by this is organizations that are doing customer support and customer enablement. We do see that as one of the challenges that comes into play is being able to make sure customers are successful and you are tracking customer health and success with that product. So the early versions of the product, where it's small, more MVP style, you often won't have that customer support in place. But once you start getting any kind of significant base of users in place, then you really want to have that customer success, customer health motion starting to go. And so when you think about the cost allocation, think about you'll want to do a pro forma to really understand what are the operational costs that that the product can support in order to make sure that it's successful and those customers are supported and that you're driving the kinds of renewals you want. So it kind of depends on how your pricing of your product is, and you're definitely going to want to model it out. But it is an important component, whether it's a dedicated team that you can afford to do it, or whether there are some people who are part-time. There's a ton of tools and templates and other strategies that you can use to make sure that you're having the right kind of customer support conversations with your customers, getting the intelligence about how are they experiencing the products, and are they going to renew? What are the challenges they're having? Are they seeing those aha moments of value, and making sure you're connecting with them at that level? So a great question, thinking about what are the product support functions that you'd want. All right, some great questions. I'll stick on just for a couple more minutes if there are any more, but thank you all so much for participating. Oh, interesting question coming in about if with large language models, and I would broaden that to Gen AI as well, being introduced in product workflows, are we seeing pricing models change? That's a really interesting question. We conducted a panel not too long ago with some B2B professional services executives, and they were talking about this topic of are they going to be able to essentially deliver the same value or better kind of value experience to their customers while gaining a lot of efficiencies by bringing in Gen AI to support their staff. I think it's going to be mixed. Some people are going to use Gen AI. What we heard is some people are using Gen AI to give a better value, better experience, and are not thinking about lowering prices, where some of them are going to use it to make their product more competitive. But in particular, where we're seeing the prices coming down, it's usually so that they can reach a segment of customers that they weren't able to serve previously. So one example that we talked to is an organization that's putting together sort of marketing videos, and their traditional service was pretty white glove, and they design it to spec and really capture the brand and the message. And with some of the Gen AI video capabilities, they're really putting together some interesting proofs of concept of how could they do that much faster, cheaper, and be able to offer it to a whole segment of customers that weren't able to afford it before. So that is an area where they're framing it as a different kind of offering, so as to not cannibalize the more premium videos that they're delivering, and they're going to be able to even increase the quality there, but they're offering it as a more limited product offering for a new segment that would be at a lower price point. So that's generally some of the things we're seeing there. Great question. Okay, so we have another question. Since I highlighted the percentage of organizations cutting product innovation budgets, any thoughts or hypotheses on why this might be the case? Is it not a priority at this time? Need to keep the lights on and can't afford it? So it's a great question, and I want to dig in a little bit deeper into our data, but I do have some initial hypotheses, which is for some organizations, they will get excited about a technology or an opportunity to productize, and they'll try and a couple things will happen. They'll either go and just launch something without doing the right kind of market testing and market validation, and it flops. And so then they feel like they tried it, it didn't work, they abandoned it. Or they ended up trying to do too much, and we always say think big but start small. Some organizations will caught in trying to deliver the perfect solution, and so when it takes a really long time for them to see the results, sometimes executives will lose patience. And even for organizations that are able to go to market and get revenue pretty quickly, the metrics of a productized offering are different from a traditional services in that they start out smaller but then tend to scale, because you have that kind of recurring revenue ends up becoming a compounding thing, but it usually starts out smaller than a traditional services contract, which would be, if it's time and materials, it'd be larger upfront. So when executives are looking at, oh, we've got this really small line item, sometimes it takes patience and sticking with it before you start to see that scale and compounding. So, it's either they haven't done the due diligence and launch a product, doesn't work, they don't have the patience for it, or they just are going to end up taking too much time. Those are the three things that often will result in productization not taking hold and executives losing patience and saying, hey, this isn't bringing in the returns we want. Of course, there are other cases where sometimes in tough times, people say budgets are tight, we need to focus back on our core of our business. And so we can't experiment with other things. But we also see an equal amount of time where people say, in tough times, we got to find a way to innovate and protect that. So those are some of the things we've seen in terms of those organizations cutting budgets and the hypotheses of why. Great question. All right, not seeing any more questions coming in. All right, again, so if you want to dive deeper into the data, please schedule time with a member of Vecteris team. you can get a free copy of the Productize book. And of course, we always love people to become members if you aren't already of the Vecteris advisory solution. So thank you everyone who has joined us today. Really appreciate the time and great questions that come in. I look forward to hearing more from everyone. Thank you.